Hi, I'm Brett Swartz, founder of Capital Gains Tax Solutions, where we use the Deferred Sales Trust to help you escape feeling trapped by capital gains tax so you can create and preserve more wealth, or help your clients do the same when they sell highly appreciated real estate such as a primary home, commercial real estate, and or a business. In this video, we're going to cover, is the Deferred Sales Trust a delayed 1031 exchange? The answer is no. The Deferred Sales Trust is not a delayed 1031 exchange. In fact, they're completely separate tax codes which have separate rules altogether. I did a series on this. It's the top 8 reasons to consider the Deferred Sales Trust over the 1031 exchange. You can see that at the end of this video. But in the meantime, let's explain how the Deferred Sales Trust works and why it's not a delayed 1031 exchange. Oftentimes, folks like the Deferred Sales Trust as a place to park it, but they maybe want a year or two to park it, and then they want to maybe 1031 out of that. In other words, they're looking for a delayed 1031 exchange. The intent is to get the best of both worlds. Unfortunately, you have to choose your horse, meaning you have to choose IRC 453 or IRC 1031, which is the 1031 exchange. So you choose one or the other. Both have their pros and cons, but both have their rules. You can't combine both. Now, when you're doing a 1031 exchange, eventually you might sell and then move to a Deferred Sales Trust. But once the funds are in the Deferred Sales Trust, you can't 1031 out of that. So you have to choose one. Now, that being said, you might want to ask yourself, well, why do I want that? And have you considered also the advantage of a new depreciation schedule? So a 1031 exchange, the depreciation schedule travels, and depreciation is the one of the top reasons to own investment real estate, because the depreciation offsets the income. But the challenge is if you own real estate for long enough and you keep trading, that basis continues to travel, meaning on that next property, you don't have as much to depreciate unless you really buy a bigger property. Now, the solution is the Deferred Sales Trust. You can move the funds into the trust, and every time you partner with the trust, you get a brand new depreciation schedule. Then you can sell that property, move it back into the trust, and then go do another new deal through the Deferred Sales Trust, which would give you a new depreciation schedule as well. So those are a couple reasons to consider the Deferred Sales Trust over the 1031, but also to clarify that no, unfortunately, the Deferred Sales Trust is not a delayed 1031. You can't just freeze the money there for a couple years and then 1031 out of the trust. Once you're in the trust, in order to maintain 100% tax deferral, the funds have to either go into investments from the trust, or eventually you pay the tax when you take them out. So we look forward to connecting with you, and we look forward to answering any questions you have. Feel free to reach out to us. Go to capitalgainstaxsolutions.com. Click on book a free call. Also click on request a quote to fill in your information for the Deferred Sales Trust calculator. Thank you so much for watching this video. Take care.